What's up everyone? So yesterday's video, we talked about how we had a potential long setup during London session yesterday, targeting the previous daily high. That has played out pretty much spot on because, you have validated the order block and boom, off you go. And in this video, I'm going to give you the playbook for today, just giving you an update on the weekly plan that we had come up with, during the start of the week. And given that it's Wednesday at the moment, we have news heading into Thursday and Friday non-farm payrolls. This is going to be a really interesting week to watch out for. Now, just a quick little side note, we are hosting a free masterclass this Friday. Inside, I've made pretty much like 150 slides on how do you use macro for crypto. These are stuff like, I'm going to teach you how to read interest rates, inflation, stuff like that. And this is just, the core macro factors. There are, of course, volatility, how to track stablecoin flows, and how to just essentially use macro so that you're getting into crypto when the bull run's about to begin, and you know when to get out by reading macro. So if you're interested, guys, it's free. It's just pure value, no fluff, no BS. First link in the description box below. And now let's get into the video. So early on in the week, we talked about how the first, second, and potentially even third day of the week is going to be, pointing towards the upside. We discussed how we have a potential market maker sell model setting up on the lower timeframes. And in this case, this is your original consolidation. That's your first leg up. In this case, that's your second and third leg up. Ultimately, currently, market structure has broken after sweeping the high. This blue box here is a daily fair value gap. And so if there is a day where Bitcoin continues to go lower, then this is going to be the day. Now, the area that you want to look out for is going to be this blue box, this gray box right here. We're going to discuss that in a bit though. For now, let's just go back up onto the daily chart so that you guys can keep in mind what is the bigger picture. In fact, let's start off on a weekly chart. Just to reiterate again, right now we're in a situation where the last time we had a liquidity sweep underneath a previous weekly level and you failed to close below it, we basically got a long trade for 3.5 hours. Now, we did already secure our partial profits at this previous weekly high there, and currently prices already started dumping. This is, again, the exact same setup as what we had back here, where we have a liquidity sweep above the previous, or rather, the weekly high of 2 weeks ago, but prices failed to close above the level, which signifies weakness and a lack of, willing buyers at these high prices to continue pushing the market higher. And this makes sense because if you take a look at the daily chart, you are overall still in bearish order flow. Right here, that's your bearish order block. You break down, you try to break above it, but you got rejected instead. And boom, you form another bearish order block. You break down, you try to, break above it. You fail and you keep going down. At the moment, this is the order block that we need to overcome, this one right here, for us to say, like, without a shadow of a doubt that, hey, Bitcoin is bullish. And until that happens, we are going to be leaning towards price coming into this bearish order block and for continuation towards the bearish side. So that is the bigger picture so far. And we have been pretty spot on with this over the last 2 to 3 weeks. And so this is still playing out. And so now we go on to the daily, and I think we might have a potential setup here. First of all, I want to draw your eyes to this low and this low right here. These are relatively equal lows, which means that this is going to be a draw on liquidity that is going to trick a lot of retail traders or just traders alike into thinking that, hey, market is quote unquote having strong support here. And they're going to be led to believe that, hey, you're going to go up from here. In reality, though, relatively equal lows or relatively equal highs act as a drawn liquidity, which means chances are, even if you were to go long, I wouldn't do it here because I do think that these levels are going to get swept out before some kind of an up move. The same thing that happens here, where you have a swing high, like if you take a look at the most explosive moves in the market, you'll always see that down moves, big down moves, tend to be preceded by a liquidity sweep on the buy side. And boom, there you go. And similarly, the most aggressive moves, in this case, this is not very aggressive because overall you're still in a downtrend. That's why this is not very impressive. But the up move begins after you sweep out sell side liquidity. Same thing here. We have just swept out buy side liquidity. At the moment, sell side has not yet been swept yet. And so this leads my thesis to believe that we are overall still going to head lower, even though the first couple of days were, pumping. And I'm going to give you the exact scenario and the exact criteria that you want to look for in order to get into a trade. And potentially, I think you might have a trade even today. So on a 1 hourly chart, you're getting something similar here, where you have a sweep of buy side liquidity and price immediately breaks structure, forming a bearish order block. At the moment, it is the London session as of the time that I'm recording this. In fact, it is almost the end of the London kill zone. In fact, it is the end of the London kill zone as of right now. It's 5:01 a.m. And so chances are your opportunity is going to lie within the New York session starting in just about a couple of hours. And if you do retrace into here, anywhere between 7 a.m. till like 9 a.m., and you fail to show any sort of bullish reaction, basically, if you trade into this bearish order block right here and you fail to close above it, then that's going to be your signal to go short. And chances are your entry is going to be, anywhere within the order block, stop above the strong high here. A strong high is just a high that has swept liquidity. And so we anticipate that that level is not going to get revisited anytime soon. Now, that is going to be the setup if you get it. Now, there is also a potential that today could also just continue going up. And that leads me to this green box that I drew right here. Now, this green box is, if you take a look at the 1 hourly chart, disregarding the market maker sell model, you can see that overall you are in bullish order flow in the sense that this green box right here is a bullish order block that prices traded into during the London session, and currently it's heading higher. So overall, 1 hourly trend is still heading towards the upside. And this is why we do an analysis on the higher time frames first, to keep in mind the bigger picture, because bigger picture is bearish. Now, the lower time frame might not add up yet. And so using the higher time frame, we can formulate a lower time frame plan of action following criteria. And in this case, it's going to be coming into here during the New York session. If you fail to close any candle, like if you don't get any bullish candle closes on the 1 hourly chart above the bearish order block, then you're good to go. But if you start getting bullish candle closes above the order block, then, today might not be the day where we go short. Now, there is also a second scenario where this swing high right here might just get swept before price hits lower. If we take a look at potential liquidity levels, we can see that, for the most part, it's already been swept, like right here. See those relatively equal highs right there? How it acts as a drawn liquidity? You're seeing it right now. Price sweeps and boom, right? And we're getting that set up here. 1, 2. Those are relatively equal lows. And so the second scenario to happen is potentially something like this. Now, this is going to take much more time to play out, potentially over the course of the entirety of New York morning, but it's a second scenario to keep in mind. So we've discussed the bullish scenario and we've discussed the bearish scenario. Now let's try to think one step ahead. Today is Wednesday. Friday, we have non-farm payrolls. Non-farm payrolls, for those of you who don't know, is probably the most volatile news event there is, basically aside from like interest rate announcements, maybe CPI, maybe FOMC, but I think non-farm payroll still takes the cake. And so this is going to be a volatile week overall. We've seen it already with just how Monday and Tuesday have reacted. And so far Wednesday has been pretty volatile as well. And this is what we want to see. As traders, we want volatility. Volatility is good because if there is no volatility, the markets are boring and we get chopped up. So there is also a chance that, the market just starts ranging around this level before we get a true move towards the downside tomorrow. But again, right now we have a potential market maker sell model already in play. Now, one last, factor, like this is a bearish scenario, but the most bearish scenario, let's just put it that way, is if you get a rejection off of this order block right here and you start getting bearish candle closes underneath this green box right here, that will signal a change in state of delivery, which basically is just a fancy term for saying that the order flow has changed. And once this happens, let's just say there is without a shadow of a doubt that price has now become bearish and you are about to start going lower. So this is going to be the game plan for today. Now, I would love to go long here purely based off of the lower time frame order flow, but the fact that, we are kind of anticipating some kind of bearish move on the daily chart as well as the weekly chart. And in fact, price is tapping into this order block as we speak. And so right now we just want to see, within the next couple of hours, you don't want to see price break above and close above. What you want to see though is just a wick here and price starts forming bearish candles. That will be the signal that you need. I'm not confident to just say, put a limit order here right now and just, target that low. It's a bit too early to tell for now, but we do have a potential setup. And yeah, I could totally be wrong on the bearish, bias. Like this weekly candle could just completely get overcome, in which case this is good for crypto. It's just based on the information that I have right now from the last week's candle closure, we would anticipate a open, high, low, close, where we sell above the weekly open and we look to buy back during the bearish expansion basically. Now, the way that this gets invalidated is if this week just starts closing bullish and price just keeps trading higher. When you get a bullish candle close here, what's going to happen is that this entire down close candle here is going to become your weekly bullish order block, and boom, next week is going to also be very easy, just trading towards the upside. For now, I'm just playing it based on what I can see and based on my understanding of the markets. So hopefully this gives you a really good idea of what to expect heading into the New York session today. Remember guys, there is a free masterclass going on this Friday. It's all about macro. It is going to be everything you need to know about macro and how to use it for crypto. We're going to go through case studies. We're going to go through about 150 slides. There's going to be bonus materials for you, a quiz, a flashcards, and all that good stuff. I know this is not going to be one of those webinars, quote unquote webinars where, I just spend half the time selling you something. We're actually going to go in depth. There's going to be a lot of value, and I hope to see you guys there. Bye-bye.